I'll call our next card on the screen, which is, Mahesh, specifically to do with the India quarterly growth numbers. And from all the parameters of economic activity that you're tracking, what's your best estimate of this, at this moment, of what quarter 3 and quarter 4 look like in the immediate context of how the Indian economy is revving up at this moment on the back of the pandemic?
So I think that the coming few quarters are going to be slightly slower than what we saw so far. But I think what is important to look at is that these are noisy times. So year-on-year growth rates are extremely noisy because the base can be very bad or the base can be very high. And it's been very topsy-turvy, Q on Q in recent times. What I would like to say is that India has survived the turmoil quite well. We have kind of shown that we are quite resilient in very severe shocks, extremely severe shocks of the kind that we saw, and there is still resilience. We're still growing at a fairly good clip. And that, I think, is the most important thing. I think the next 2 quarters will be slightly modest, but look at this. The economy is split into kind of 2 things that I see. I study the corporate sector, and the corporate sector has been doing wonderfully right through. So what it looks like is that the Indian economy is not only resilient in the GDP growth concept in that way, but what is more important is to see that the biggest driver of our growth, which is the large enterprises of India, have done remarkably well. And the entire ops have been more efficient, they have been more profitable, they just don't find the need to invest. They're so good that they don't find the need to invest. So I think in the coming few quarters, we are going to not do too badly. We will surprise most forecasts on the upper side. I don't see too much of a negative downturn. I see a problem in the labor market, but that's a different story.
We'll come to that. Pranjal, with you, we'll spend a moment on the United States and Europe. And if you use your insights to give us a sense of what you think is most likely to happen, there's a lot of talk about the inevitability of the United States going into recession, how prolonged is that likely to be, and given the energy crisis in Europe, how you see the European economic situation go from here.
Yeah, I think the mantra of 2022 globally has been that we have to bring down inflation, even if that means that we are going to sacrifice growth in the short run. I think that has been the main mantra of the advanced economies. And we've seen the impact of that in financial markets across the world. Bond yields have gone up, the dollar has strengthened, equity markets have corrected, but we've also started to see the impact of that mantra on the real economy. You know, we're seeing how household mortgage costs are rising, how household construction affordability is falling, how consumers' real purchasing power is falling, how consumer confidence is weakening. You know, all of these things are coming out of the advanced economies. Now, we are not really forecasting a synchronized recession globally, but what we are forecasting is partial recession. Several countries, several sectors, several households, several corporates are going to go into, recession like economic status over the next year. And I think the repercussion of all of that will be very clearly felt on India as well. As in, I think the last 2 quarters, we've done well in terms of growth, but I think the next couple of quarters are going to be tricky. I worry about 2 drivers of growth. One is exports. A lot of us don't realize the important role exports have played in India's post-pandemic recovery. Just compare June 22 to June 2019. GDP has grown 4%, but real exports have grown 20%. Exports have been a key driver, but now exports volumes could decline, will likely decline over the next couple of quarters, and that will hurt our GDP. And the second thing is pent-up demand. You know, we came out of the lockdown, we started spending, we've spent a lot, we've taken that extra holiday, but at some point with high inflation, we will stop spending. That pent-up demand will run its course. And I think that is also something that's going to sort of hurt growth. So I think the next couple of quarters, we have to be careful that growth will slow a little bit. We shouldn't get, roiled about that. Instead, we should focus on macro stability, keeping inflation low, keeping fiscal deficit on a downward trajectory, keeping, the exchange rates more stable. And I think if we've got that sorted out, then once the global cycle turns, then we will be able to ride high again.
Thanks, Pranjal.